Hi, I'm Dan Smith of DPS Legal Counsel, and today I'm going to be talking to you about a very important issue of tax compliance for small businesses. Every entrepreneur who starts a small business needs to pay attention to tax compliance. And the issue today I'm going to be talking about is the trust fund recovery penalty. What that is this. When you have employees, and if you may start off with your business and be the only one working in it, but at some point you're going probably to have employees. And when you do that, you're going to be issuing paychecks on a regular basis and withholding the employees some part of their federal income tax and Medicare taxes and Social Security taxes. Then at some point later, you're going to file returns in connection with those withheld taxes, and you're going to be depositing or sending in the money to the government for those withheld income taxes, withheld Social Security and Medicare taxes. What happens sometimes is businesses get in trouble by withholding the money from their employees' paychecks, but then not paying it over to the government as they should. When that happens, the government will come back not only against the company, but against responsible persons within the company who were responsible or charged with the responsibility of withholding or collecting the money and willfully failing to pay it over to the government. The trust fund recovery penalty applies essentially like a 100% tax against responsible persons of the company, so that if you are to withhold, and you do withhold, let's say $1,000, just say $1,000, and you fail to pay that over, and you're a responsible person who is charged with the responsibility of collecting and paying over the monies, and you willfully fail to do that, the government can come back against you personally and collect that $1,000. It's not just a liability of the company, it becomes a liability of the responsible persons. And so this can kind of mushroom into a huge problem for a company if they fail to pay over the amounts they withhold from their employees' paychecks. Don't let this happen to you. These monies that are withheld are held in trust. That's why this is called the trust fund recovery penalty. If you have employees and you withhold money from their paychecks for taxes, you have to pay it over. You have to pay it over. If not, then the government's going to come back and seek to get that money directly and personally from you as a responsible person. Now, there are some defenses to IRS cases brought against responsible persons or so-called responsible persons, and the main defense is you weren't a responsible person. You either were not, you didn't have the responsibility for paying the money over or collecting the money, and you did not willfully fail to do so. But this is a tough situation for insiders, responsible persons of small companies. If you have employees, you've got to take seriously the responsibility of keeping up with your tax compliance and making sure you send the money into the IRS as you need to do. All right, I hope this helps, and we'll talk to you next time.